All right. Oh, we are live, it looks like. Hope you guys are having a good weekend. Hopefully, if you have snow, you're enjoying it. I personally love it. Got a ton where I'm at. Um, One thing I just want to get out of the way real quick. So last weekend, we wanted to donate to Pumbaa. So in case you guys didn't know, we wanted to find something to donate to. This was suggested. I tried to do it last week, and um, this guy, Pumbaa, the warthog. So I just took care of that. And where is it? Let me grab this. Make sure there's no account details on here. Yeah. So we just sent $100 over to help save Pumbaa just a few minutes ago. What's up, C. Lewis? Thanks for stopping by. So we just sent this over, got that all done. Finally figured out that we could just send it directly to a PayPal, and that is all taken care of. And let's see here. Let me grab a couple other things. So we're all done with that. We're done. At least this week. Hopefully during this week we can find another one for next Saturday. I may just have to send another hundo over here because we were planning on doing it last weekend, and we wanted to do it a couple different times. All right. I'll stick this thing up. See how we've been doing for our week, our month. This week, at least we bounced back up a little bit, so $1,300. That's usually worth our couple 2-3 hours that we put into trading. For the month, we're up $4,000 and 162,000 over the last 3 months. So we'll see if anybody has any questions. Otherwise, I'm just going to start going through my comments here, and we'll answer some of the stuff that that I wasn't able to explain in great detail. I usually have this up, but we had a long call with Logan. Went a little bit long for us, but super good guy. We're gonna do an interview over there next week. Not sure when it'll be uploaded, so maybe a week and a half or so. Let's check out. So normally I have all this stuff up anyways. All right. Eighth Day Profit, what was the first catalyst that rocketed your portfolio from 573 to thousands? So the first thing actually, so in the very beginning of my trading, I just put a few $100 in there and wasn't sure what I wanted to do with it. And this was all when the pandemic, like pre-actual pandemic, before it was called that. And we knew about the about COVID very initially, and I traded plenty of stocks in the past, and I knew there was a way to profit on stocks going down. My thesis was everything is going to drop based on this, and that's at that point that's when I got into it, figured out how to make money on the SPY going down, which was obviously buying puts, that and volatility going up. So that was my initial jump. So that's actually, if we look over my whole year, let's see here. So it's kind of hard to tell. So negative 50,000 because I've taken about 50,000 out of this account. But this initial run up, like March, where I was went from plus $400 up to 70,000. That run up was all based on that. So then as I kind of came down here, because I thought I was good and knew everything, kind of came down here, lost a bit back, right, about 15,000 or so, and in here was pretty stagnant. And I realized I did not want to go through this drop again, and that's when I really discovered credit spreads. Not necessarily discovered them, but discovered that they were the right vehicle for me for trading, and knew that's what I wanted to be able to do. Steven, you made it. You're not working. Awesome. So that was my initial first little pop-up. That's how I kind of grew that initial amount, and then as you can kind of see, it's been a steady incline after that. Around June, I also started a Tastyworks account, and I started all over. I was like, I think credit spreads are the way, and I started that account with $600, and it's something like 12,000 or so now, and that is absolutely all I trade on it. I only touch it about once a week, maybe a couple times a week at the most. There's definitely been a few times where it's been a couple weeks since I touched it and realized that hey, I haven't touched this in a while. Tesla's ran up. Why don't I roll these things out? And I'll still have like credit spreads down at 500 that are pretty much gained all their value at that point. How do I get to show all my options and shares to show on the screen? I don't know. I just go to Robinhood.com. Like, are you saying like how this is right here? This is my default view when I just look at it. I don't know what other view you can have. I'm gonna go to school this week for 2.5 months, doing what I can. What are you gonna go to school for? Are you like elevating your career, or just like are they CE credits or something that you need for your current stuff? You can only get a few to show. I don't know if there's display. I don't know if there's some other way to. I don't know if there's some other way to set it up. Oh, nice. I don't know what an ALC is, but I know what an E6 is. Yeah, Staff Sergeant. My father was an E6 when he retired out of the Navy. Oh, is it maybe because I have a big screen? I don't know. I guess if I had a smaller screen, this is like a 4K display, so maybe I get more, but I honestly don't know. Oh, that's funny. Yeah, it's been an awesome journey. It was, there's definitely like those scary times too, and that's why this little first dip, I definitely could have quit here. I mean, going up to 70. So I can't remember. Let's see. I think at that point I had ordered my Model Y, which with all the options and taxes and all that stuff. That's about a $70,000 car. So I was like, cool. I just turned $500 into my car, paid off cash, and then when I lost back like 20 grand of it or 15 grand of it, I was pretty sad. I was like, I could have quit right then. And I mean, it was what, March, April, May, June before I got my crap together, because I was just like playing calls and playing puts, and some things would pay off and some really wouldn't, but there was absolutely no consistency in what I was doing. So it was really all over the place. I had tons of wins, tons of losses. And then I got my crap together, and then you can see the rise after that. I mean, we did have, what was this, like battery day or something. I mean, we had a couple little drops, and I mean, going from, what was this, 145,000. This is actually a crazy drop. 145,000 down to 75. That's scary. So these smaller ones, like over the past few months, like when we're just down 20 grand or so, it's not nearly as big of a deal. 20 grand isn't much. As far as like $20,000 is a lot of money. Don't get me wrong, but as far as like relative to my account size, and I still do play. I do definitely make some plays now and again, but it'll be less than 1% or 0.5% or something like that. I'll pretty much YOLO, and that's okay, because I'll be making $20,000 worth of premium, and then I'll play $1,000 of that on some YOLO play, and a lot of those work out. And I'm definitely becoming more strategic at it as it's gone up. What other stocks have you chosen for spreads other than Tesla? I'll do some SPY, some Dow Jones. I've done Apple, but the fact of the matter is I've put so much time, research, energy, and effort into knowing Tesla, that's my comfort zone. And there's that's like the place I need to be. And just like, as you guys probably check out, tons of different strategies. There's so many out there. Like, there's Will Strategy and Poor Man's Covered Call and what I do, and just buying stocks, and then just finding the latest YouTube video on whoever says this can 4x, 5x overnight, buying that and hoping you make a ton of money overnight. There's tons of different things that you can do out there. This is just what I honed in on, and that underlying I know well. Like, I know when I can see an overreaction. I know when news is bad. When it's kind of like, the best example I could give is just knowing a person. So, some people you could call a name, you say, "You idiot," and some people will go and cry. You can call other people idiots. They'll laugh, and you just kind of get to know the personality and all the factors about a stock, and that's why I'm so comfortable with it. Even when we're, we have some 795s here, right? And I mean, it's touched 795, but I'm not as worried on that as if I was like just playing the SPY, or even Apple. Apple's like relatively safe, but I just don't know it as well. I don't follow every stitch of their earnings call or anything. I'll sell some on some other random stocks when I see a huge drop where the news doesn't necessarily correlate to the to what's going on with the stock price. So if I see a huge drop and I just know there's money to be made there, and I don't want to buy a call, I don't necessarily want to buy the stock, I can sell something out of the money a couple months off and just play it that way. But again, relative to my positions, I mean, we have 61 of these guys, right? That's 30 grand worth of premium right there, just on that play alone, and that's something I'm comfortable with. Yeah, probably is a laptop issue. I've had problems with different software when I was using one for a long time that was like 720p compared to like a 4K or even 1080. All right, if you guys have any other questions, like specifically, let me know. I'm gonna kind of go through some of the older stuff that people have asked that I maybe could not explain very well. So E had asked me what rolling out means. So let me see. When you say rolling out and down, can you explain a bit, please? So rolling out or down, rolling out just means time. You're adding time to the position, and rolling down means down in price. So, for example, and I did do this week with some 800 level things that were relatively soon. And we'll grab one of these real quick. So let's say this 785, 780, and this is a 3. This takes me a second, guys, because it's because I just don't use this for trading all that often. I typically just use my phone. So 319, 785, 780. So let's see, why are we our put side? So let's say even the 795, 790, if I get uncomfortable in this position, like I see Tesla's too close to where this is, and I want to move it out and potentially down, I can just take this. It's pretty straightforward on both platforms, but you just take the spread. So this is a combination of the 795s that we sold, 790s that we bought, and we hit sell up here, and we sell the ones that we bought, and then we buy the ones that we sold, and then you can go out as far as you want. These are $5 increments, so they're not always going to be available that far out in the future, but we'll check April Fool's Day, see if there is. There's a 795. There's actually, oh wow, there's a 250 there too. And then so this would just be rolling it out, right? 795, 790, and for some reason they're giving us 0 credit on this. Normally rolling it out is going to give you some credit, but this is so close to the strike price right now, maybe not. Or maybe the options pricing hasn't updated. If I was to want to move it down, I would simply, let's say I was really scared that we're going to go hit down the 750, so I can select a 750, 745, and you can see that there's a cost there. So when you're rolling these down, you're typically going to pay something. It depends on how much time. Those are the two components. You have time, and then you'll have the extrinsic value, which is going to be relative to the strike price. So let's say you had initially received $100 credit for the one that you opened. Well, you could give back $25 of that, so you still have $95 to gain, and move it down. And that's why I like selling them out and keeping them out a few weeks, because it still has that time component. Even though this is pretty close to the strike price, I can still move it down 25 bucks, and that to me would be even safer. I'm still comfortable at the 795 personally, but that is rolling it out and that is rolling it down. And I think, Matt, you asked me in an email just about like stuff not getting filled. The one thing I had thought about was if you were trying to get something filled and it just wasn't filling, sometimes you need to lower the price on Robinhood that you're trying to get. And then for some reason, a lot of times it won't show you whether or not it's a credit or debit. Like you have to select it. And if you're rolling it down and out, if it's not very far out, close to the money or even in the money, sometimes you need to pay for it. And this is like one of those cases where you would need to pay $25 per spread to move it down. But what you're buying with that is more peace of mind and more safety, and that's fine. And we're only moving it out a couple of weeks here in this example. What percentage of my portfolio is in Tesla spreads? You feel your portfolio is too heavy on Tesla, and when it drops like it did Friday, it causes severe heartaches. It does. And that's also why I talked about Friday, man. Part of the price that you pay for trading is psychological, and it is emotional, and it is difficult. So like, as much as we try to detach ourselves or like or kind of zoom out and look at overall what everything is doing, it's tough to do. So you can definitely, I mean, if you're playing by the book, yeah, you should be totally diversified, and you should not have so much of your portfolio. You should not have as much as I have, technically, or by the book, and put credit spreads on Tesla. If you ask, probably some professional, this is idiotic, right? It could go totally down in my direction, but this is my risk tolerance. I'm fine with that. If I lose on everything I have open, and there's literally hundreds of them, I'm actually only setting myself back like 2 months or so of profit. What's up, Bussy? Good to see you again, buddy. It all depends on your risk tolerance. You're right, Taylor. I use 50% of my small account. That is 3% of all my positions. So I'm allocating very little to Tesla spreads because I don't want to see a big drop in my portfolio. Yeah, and it's tough to see. Like, you have to think about the time frame we're looking at this. Like, generally, we'll comment on how we did for the day. But really, we're looking at, even when we're opening up a spread, usually minimally, people are doing it for a week. I do it for months, so really I should be looking at my account or my portfolio value over a month's time or multiple months, because my goal and your goals probably isn't to retire tomorrow or next week. Your outlook and my outlook is years down the road, like at least a year, at least 3 years, 5 years, something like that. And that's what we should be looking at. So those bigger time frames of looking at it over a year, I think, is a lot smarter. And just when you're saying, like, emotionally, that's why everybody can't invest. I think it's Warren Buffett. He says it, like, a lot of people don't have the emotional, like, emotionally they just cannot handle stock, right? They can't handle seeing the down percent, the down times. You're not going to get, every day is not going to be green. Every uptick is not going to be small. Every downtick is not going to be small. It's just not what happens in the market. This is volatile and it is fair. So your risk is always going to be opposite of the gain. So the riskier you want to be, the more you could potentially gain. And if you want to be very, very little risk, like, you could sell a credit spread down. I mean, you could be down 600 bucks. Yeah, you're going to only collect, what, 12 cents on that thing for 1,000, or like 12 bucks on 1,000, or no, I'm sorry. What is that? Maybe $50 for $1,000 collateral, and you have to wait till April. Extremely unrisky. Let's actually look at the. Wow, they only give that an 85% of chance of profit. That's crazy. But you can sell as far down as you want. You could take the SPY. You could take Johnson & Johnson. You could take AT&T or something that is super stable, and you could do credit spreads on that. And that, I mean, that's as close to no or low risk as you can be. If you're selling just cash covered puts, I mean, that's even less risky. Worst case scenario, you end up with a pile of stock. And if it's on a company that you want, it's win-win-win. So you just have to balance it with your own risk tolerance. You opened up 2 of the 750, 745 March 19th you talked about this week for 123. Should have waited a little, would have got crazy credit or more safety. I still feel like that's a good spot to be in. And then if you want to, you can always average on them. But yeah, it's so difficult. Like, we absolutely can't time the market. And we're just waiting for that stuff to decay, for sure. So, I mean, you guys saw my account probably. It was down 26,000. Friday, I think Friday at one point we were down $11,000. And that's what happens. You're just not always going to be on the right side of it. And the same way you got into it and you're like, well, I should have waited, and everybody can see that in hindsight, 100%. We all know what we should have done. We all should have bought NIO at $2 or $3, or if we had perfect hindsight, we could have bought Nikola and then dumped it at the peak. We could have bought GameStop. We could have all done it, but we're playing the right side of these trades. These are high probability trades, and the probability is always, it's put right there in the front of your face as far as the chance of profit according to calculation. Tech didn't, yeah, and tech did need a pullback. I 100% agree. It's up there at the 800s. It's pretty scary. I like to see some of the consolidation though. It looks like around the $800 is the agreed current value. In January, it opened up 100 spreads every week, and it worked as well as Tesla was climbing. Where'd you open them up at? Did you open them up too high? The problem becomes, I think, when we get greedy. If we'd opened them up like $150 out of the money, I think we've been good, because the top was what, like 880. So even if you were to open up at that peak, you're still pretty good. Because yeah, what was the? Let's just grab one here. I don't need live news. I need Tesla. 877. Yeah, 900. That was a crazy candle. I mean, even at the 900 peak top, you'd still be opening up at 750. And 750 still feels pretty good to me. I don't know about you guys. But where did you open up those 100 credit spreads at? I still think it's like my personal outlook for it is we're still going to see, I think we'll see back at those highs in the next month or so. I mean, you never know when one tweet comes from Elon and it's you know, either they're releasing something early, the stock split, the next who knows what, and things, you know, they skyrocket up again, and then we get to secure all that collateral super quick. But and I'd rather be in that position. I'm kind of safe, but and if it rips up, I'm benefiting on it, but I don't have calls that I'm going to totally lose on if it doesn't. And we can still, at $150, even at that peak, I'm still down at 750, where I can absorb that, no problem. For weeklies under $800, you won't get a good premium when it was around 870. Yeah, and that's why I typically don't do weeklies. Just not enough time for me, and definitely not enough time to manage it should it go against us like it did, because I'm sure those got scary and the value got super small. Spread's always nice when it's going up, but on the way down will drive you crazy. It does. It's rough. But that's also why I only do it on this specific stock, just because I'm comfortable with it. Some spreads of Qualcomm and Twitter when they're at the bottom. Yeah, I mean, that's a great way to play it too. I mean, the next step safer would have been just straight up selling the put when they're down there, if you have enough collateral to collect it, to sell that. Go through some more questions over here. Oh, I need to actually, let me check my email real quick, make sure I answered Matt's question. Mm, come on. So Matt asked me, let's see. He has a Tesla spread at 780, 785. 3 contracts expires March 12th. For the past 2 trading days, I tried rolling it out. I went 1 week, 2 weeks, 1 month, tried multiple strikes, and even changed it so I would pay $1 per contract. None of that filled. I would wait 15 to 20 minutes at a time just to see if they'd settle down and roll. Long and short, they never rolled. My only option is to buy them. So that's super odd. March 12th, they should be able to roll, especially if you're willing to pay $1 to roll them. It also depends like where you're trying to roll them. So because that was so close to the current price of Tesla, if you're trying to do it right then when it was dipping, it didn't have a lot of value. And if you're just trying to roll, if you're trying to roll down, you may have to pay some, and you may have to pay quite a bit because the value just wasn't there. So if you just roll them out horizontally, like evenly, you should have been able to get away with paying a little bit. And actually, you should have been able to collect some money if you tried to roll them out a month. 1 week usually isn't enough, though, honestly, when you're trying to roll them out just for a safety play. I would have rolled them out a month, even 2 months if you're feeling uncomfortable, and probably I would have just slid them to the side instead of trying to roll them down so much. And you probably just weren't offering enough. I need to know what you're trying to roll them out to let you know what I think. Do I think Elon investing in Bitcoin and taking Bitcoin as a payment as a future catalyst to Tesla, or what? Here's my thought about this. And I actually just saw this right now, a great example with it. So I don't know if you guys have ever sent money overseas. I have somebody that I send money to, and well, I guess we just sent some more too to save Pumbaa. When you have to send money from like one company to another or one country to another, you're looking at forex fees, which is the foreign exchange. So you're having to take let's say I'm sending them to the Philippines, right? So I'm taking my whatever $1,000, or in Tesla's case, like a million, billion, whatever. You're taking that, you're converting it at some place to their local currency, so like the Philippine peso. So there's always going to be slippage there, right? Because the foreign exchange market, they need to profit to be able to be there. So when they take and convert your currency over to another one, you're going to lose a little bit there. And then you're paying the transfer fee just to go from this country to that one. So where now Tesla has places globally, it takes time and it takes money. And I think in my mind, that Bitcoin play, when they're providing their own liquidity of $1.5 billion, and they're just going to be able to move it wherever they want. On the other side of it, I think them purchasing Bitcoin is a catalyst for Bitcoin's future, because there's so many institutional investors and large companies now buying into it as capital preservation. And that, let's see, how do I say it? So that's legitimized the Bitcoin itself, and that's why we keep seeing it rocket up when people buy it. I don't know why there was so much negativity when Tesla bought into it. It doesn't make any sense to me. I think for them it's a huge tool, because moving $1 billion, and let's say they pay a 0.05% on when they need to move money from the Germany factory over to the China factory to the US factory, or whatever they have to do, or those actual accounts. I think that's huge. And And then as soon as the money gets into all these large players' hands, our fear of it being regulated has to go down, because at the end of the day, I mean, money controls policy. There's lobbyists. So if somebody decides in the government that, oh, we need to regulate this, but these big corporations, they're shelling out billions and millions of dollars to lobby against it. That's, I mean, money controls policy. So it's big on both ends. That was my question you just read out. I was trying to keep the same expiration date when it rolled down to 750, 745. I guess I don't understand. So, oh, you were just trying to move it down. Yeah, you're just gonna have to pay if you're keeping the same expiration date. That's just gonna be a straight up cost. That's why I like to use time. So you're gonna move it out, which some of that time is going to have value, and move it down. So you're not just eating all that cost just straight up moving it down. You definitely can. I mean, if you originally collected $100 and now you have to pay $50 to move it down, and that puts you back in your comfort zone, it's worth it. So what, you got half the premium at that point. So better to roll out 2 weeks or possibly a month. Yeah, absolutely. Like, I roll them out far enough. I hate losing money, so I don't care. I can roll it out as far as where you're paying me for my comfort. You're paying me to make my mistake. Like, I screwed up. You're paying me for my greed. I got greedy, and I sold an 850, 845 when Tesla was up at 880. Okay, fine. I'll roll it out till January 2022, but I'm keeping all of my cash. That's it. So, I mean, and since we have so many different things in play, right, I wouldn't be that greedy with the majority of my money, but let's say I did, and I had 100 spreads where I'm comfortable and a couple like way up there. Okay, so now I have to wait a year to collect that collateral, or when it rises, I could close it out or something like that. I am fine just chucking it down the road, figuratively, and that's fine with me. I'll just roll it out, and that's what we're selling. We're selling time on it. So you can actually move a position from a losing position where you're in the money on it at the time, and you can move it out of the money, kicking it down the road. And you can do the same thing like when you're playing, let's say, when you have covered calls, when you're owning the stock and you sold a call against it, and then the stock moves above the price, instead of you getting assigned, you can move that thing out and up, and then you're putting yourself in a position to gain more of the stock going up. Plus, if you kick it down the road over a year, you don't pay the capital gains, or at least the short-term capital gains on it. So, do I ever sell credit spreads on SPY? Yes. I don't have a normal DTE on SPY. I've done a few of them, maybe a week or two out, and it's usually when there was like a huge drop for no reason, just like a unbacked sell-off. But I'll also sell broken wing butterflies on the SPY, and I'll do those just at the next expiration and collect a little bit of premium. I was doing that for a while, but I just like Tesla credit spreads better. And the broken wing butterfly is pretty similar to selling a credit spread, put credit spread. Just a different combination of puts. So I've been doing this for a month now. 5K profit so far. Awesome. Yeah, nice cash. As long as you're taking advantage of those dips, that's what it's all about. Like you have to have some cash on the side somewhere, and yeah, because that premium is just too huge. Especially if you're confident in the underlying, you can just average and average, and then the butterfly strategy. Yes. So this would be. Let's show you one. Broken. Yeah. Would you try the Iron Condor? Yeah, I actually have an Iron Condor. I have it on Apple. We actually have. We have this Iron Condor right here. 130, 145. Collected a whole $30 on it. So I think we're up a whole $16. I did this like, I think I did it like two minutes to market close or something like that. Or we're up $8. So it was only $200 collateral. I don't like doing them on Tesla though. Tesla just scares me. It scares me so much more to the upside than it does to the downside. You can see I've sold one covered call, and I've sold it at $1,300 because, God, if they announce a stock split over the weekend, oh, and tomorrow I think Warren Buffett is going to. We should see what his holdings are. Like, I can't remember. A couple months ago, he had a. Let me get this guy up. He had a stock that he had bought. I can't remember how many billions or trillions of dollars worth. And in the SEC filing, he withheld the name of whatever that company is. So I think tomorrow, traditionally on Valentine's Day, that's when we find out what it was. Yeah, I've done a couple on Tesla too, but. Man, it's just scary. Like, where do you sell them at? You have to sell them like $1,000 on the high side to get anything decent worth of premium, and it would just take like that, this little catalyst, because we've seen it run up so high, and they're just scary for me. If it works for you, awesome. There's a strategy, and there are plays out there for everybody. I stopped out too. I had a Iron Condor on Tesla, and I think I had a 1,000 and 1,010 was the top side of my Iron Condor, but I just got scared when it started moving up crazy. Yeah, so yeah, if it ends up being Tesla, imagine what that'll do to the stock, and we have another like all of Monday for that to digest too, since the market's not open. I hope it's Tesla. It'll be so funny if it's Tesla, right? Because how many times did he say, nope, I'm never buying that company? We'll see. Do I know how to roll up on Robinhood? Yeah, it's the exact same as you roll on I mean on the downside it's exactly the same. So I can roll up. It's just on the upside, I just don't want to play it. I am bullish on Tesla, so it doesn't make sense for me to play that side of it, just to limit it. And where I'm comfortable, like you can see, 1,300, it's ridiculously high up there, but hey, I'll collect the extra $30 or whatever it gives me every once in a while. You like Iron Butterfly? I like the fact that there is a tool and a strategy for absolutely everybody. You don't have to do what I do. Most people probably don't do what I do. You don't have to do what the next guy says. I mean, there's so many different things out there. And everybody, once you learn how to manage, like you said, if you have your Iron Condor and you learn how to manage it, that's all you need to be able to do. Where can I look up where Warren Buffett originally made this investment? Oh, look up, it's Tesla, like look on the YouTube videos for Rob Maurer. It's Tesla Daily, and I'm sure we could probably find it. I know he talks about it, and then he'll give some insight. Let's see, Warren Oh, there we go. Can I share? Let me pause this. Let's see. Here. That's Tesla Daily. He goes over it, so he should have some pretty good information. Pretty good YouTube channel, like all things Tesla. I listened to probably 25% of it. A lot of it's stuff that I've already seen in the news, but he goes over a lot of it in depth. One scary thing about the Iron Condor is because you can roll it over, but I typically do 2 of them for 1K. Nice. I think in that video he'll also have a clip of Warren Buffett saying he would never buy Tesla. So we can see if that's true. Oh, so how does a trade set up for a butterfly? Like this. Let's do it on the SPY. So I believe one of the rules is about let's see, where are we? Where's our deltas? 13. Oh. Again, this platform is weird to me. How do I close this one? Nope. All right. So we sell. Actually, been doing option bull spreads. What have you been doing? Been doing option bull spreads? Yeah, there are way less risky strategies to look into buying the stock. That's super less risky. Just selling the put, that's much less risky. So the big option, or the big drawback to selling put credit spreads, is you have all your collateral at risk, like all of it. So every time I open up one and I have $500 at risk, I could potentially lose all of it. That's why I sell them out far enough to where I can roll them out. If Tesla dropped down to $200, I'd pretty much be screwed. I'd lose it all. But I have enough belief in the company that I don't foresee that happening, and that's why I'm so comfortable on it. Let's see. And also, just, you can be as low risk as you want to on all these trades, right? It's just it's just a balance of risk to reward. I mean, even how do we unclick this guy? Or is it already clicked there? Oh, I see. I mean, you can sell, what is this? February 16th, so that's Tuesday, right? Tuesday. I mean, you could have sold you could have sold way down here for a penny. Maybe you'd make $1 or something like that. You could risk $200 to make $1, like way down here, with like literally a 99% probability. So it's just all relative. The market, I feel like put credit spreads are kind of cheap, because just by the fact we win when the stock goes up, we win when the stock goes sideways, and we win when the stock goes down some. There's only the losing The losing portion is only when it drops a lot, and that's not even um, that's not even like the end game, right? Because we can still roll that out. So that's not even a guarantee that we lose when they go down. But everything is always fair. There's always going to be a reward equal to the amount of risk that you're going to take. Can you get a sign before expiration if you are in a spread? Yep. But you would have to be in the money. So you want to understand, you kind of want to understand what you're doing here, right? So you're never going to be assigned buying anything because you own it. So the only way, you're the only person that can execute that. But let's say you sell a put, right? So you're agreeing to sell these shares at 386. Or, sorry, I'm always going to get this wrong when I try to think and do it at the same time. So these only have value, right, when the stock goes down. If you bought it when you sold it, it only has value for somebody else when the stock goes down. So you're agreeing to buy, let's say, the SPY, shares of SPY at $386 from somebody if they want to execute it. And they're only going to want to sell it to you if they can buy it for a lower price. So if the stock is even 387, some idiot could agree or could hit execute on their side of it, but basically what would happen is they would have to, oops, they would be losing $1 there. So they would have to be down at like 385, 384, where they can go to the market and they can buy them for 384, and then you have to buy them for 386. I know what you mean by the shares. Can you use a sign before expiration in the spread? Yeah, you could. It just doesn't happen very often, honestly. I have stuff that I have calls that I've sold that are super far in the money, and I've been exercised a handful of times. I think like once on McDonald's, and then other than that, just stuff that actually expired in the money. Because generally, you have to think about the other person on the other side of the trade. Like when you're buying a put, you're usually buying it so you can sell it, or you're buying a call so you can sell it and you want to take the money that way. You usually don't have, like if you buy a call on Tesla, you usually don't have the money to be able to buy the shares, or you don't own the shares to be able to sell to somebody else. Oh, okay. Broken wing butterfly, sorry. Got distracted. Wow. I got snowmobiles outside. Oh, 1 second here. All right, so let's where were we at? Okay, so we were gonna sell a put, and sorry, I need to turn this guy off. Buy, and then wait, are we on the right side of these? Put this guy over here. Make sure we have enough to cover these. So that is 20. 26, 24. All right. What's our delta here? 7. Probably should have done this up 1 to do it properly. All right. Broken wing butterfly. So we basically buy a put and then we sell 2 puts below that and then buy another one down below that. So on Robinhood, where do we do this? Again, I've only done this one on my phone. Oh, why are we buying? Nope. 386s. That is 2. So we have to edit. Good Lord. 2 and 1. All right. Here is a broken wing butterfly. Broken wing because the distance between the 2 sides are different. If they were identical, like 2 strike prices up and 2 strike prices down, it would not be a broken wing butterfly. But this is a bullish broken wing butterfly, and essentially it would mimic pretty close to a put credit spread in that you're collecting very little. It's $3 in this example, but we're also expiring in 1 day. And does it show? Let's see, does it show? So this is a $300 collateral. This is 1%, basically, in 1 day. And this is just a bullish play. Not as easy to set up because you have to edit the ratios, especially in Robinhood. And it gives you essentially the same effect. You actually, there is a point if you put this into if you put this into a like an options calculator, you can see there's a point right between the first 2 strike prices, the 387 and 386, where you can make a ton of money. But most of the time you're just expiring in the money or out of the money and just collecting that $3. Let me see here. Where do my questions go? Oh, whoops. Do you guys have a ton of snow or like storms where you're at? Also, yeah, I kind of want to talk about this too. I've talked about it before. So Matt had also asked me about what my opinion on having a full-time job, living off of that, and just reinvesting all of the profits in an account to play options and spreads. Would I still take profits? And my answer is 100% yes. I would still pay myself. When we're doing this, like you guys said, there's like super stressful days and super difficult days. If you put everything that you have in options, you're risking 100% of it. If you didn't take any of that equity and at least put it into stock, I like to take cash out as well as buy stock. I think we're up to pretty close to 180 shares of Tesla in this account, and that's just off of what we've traded. So we've taken that profit, put it back into equities, and we can see, let's see, where's some of my stocks? Here's some of my stocks. Oh, only 178 shares of Tesla in the account. Coca-Cola and AT&T, those are just simple savings for me. Gap, bought this down when it didn't hardly cost me anything. MGM, Tapestry, Cedar Fair, Open Door. So those are things that I just plan on. They can sit in the account and they can chill there for the next year, 2 years. I can transfer them somewhere else. I 100% would not want to see my options side just collapse one day and end up with zero. I want to get to 100K with the strategy. Yeah, you should be able to do it. My Tasty Works that I started that I just don't manage nearly enough. When I quit my job, I'll probably manage it more. But that's 600 to whatever it is, 13,000 or something. Already at this point, barely touching it. So all this stuff will just exponentially grow. That same jump from 600 to 6,000, that's already 10x over the period of four months. And if that takes a whole year to get to 60 and another 6 months to get to 100, it's not too difficult doing this. Thanks. Have to look into the strategy more. I have Neo spreads that are deep out of the money. 34 40s that expire in March. Do you think I should roll those up? What's the value left in them? And for personal sakes, I would not want to roll those up. I'm pretty bearish on Neo as far as where it sits as a market cap. It's like, what is it, like at 90 billion or something? It's almost 10%, or maybe a little bit more than 10% of what Tesla is. And whoever says, man, I can't wait to drive a Neo, like, if you want an EV, you want a Tesla, or maybe a Porsche, or something like this. I think their market cap right now is bonkers. I think maybe they're good normal cars. I mean, if you're here, you want the American-made Tesla, or you want the one that's coming from China. Just saying. I mean, of course, I wish I would have bought the stock down at $2 just to sell it, not because I believe in their future. I don't think they're doing anything better than anybody else. They have different claimed ranges. They have the battery swap technology, which I think is absolutely worthless in my opinion. Maybe it's different in another part of the country. But I have literally charged outside of my home 5 times, 6 times when I've gone out of state, something like that. On 1, 2, 3. Okay, I've done it 4 times. I've had it since June, so in 8 months, I've only charged the car outside of my house 4 times. One time, I live in Seattle, I went to Idaho. One time, I would live in Seattle, I went to like Eastern Washington to go to a lake. One time, I went down to a mountain. One time when I went to actually another place up in the mountains that was it's probably like 200 miles or something from me. So, and then even those times, if I had the option of swapping a battery, what does that entail? That entails me getting out of the car, giving my car to somebody else. I don't know where I'm sitting. Like, it's like sitting there for an oil change where you're just sitting in the waiting room and waiting. I mean, even if it is only 10 minutes, someone else is in your car. I just don't like it. I'd rather pull up somewhere and plug it in. I'm still only sitting there for 15 minutes. If you're driving 200-300 miles, you need to get up and walk your butt around anyways. Go stretch your legs. How do you know when to take money out to pay myself? I do it every single time I open up a put credit spread. Like for a while, I was doing it just as like kind of like clockwork. I would take half of it and just pull it out. Now I don't have a strict rule of thumb, and just do it like, okay, I'm gonna do it 50% every time. But if you're just all of a sudden up and you roll things out and all of a sudden boom, there's another couple grand in your account, take some of it out. Go buy yourself something. Go buy some stock. Put some cash in your mouth. Put some cash in your pocket. It's one of the problems I see with Robinhood is it starts to feel like a video game, man. Like, Could you imagine? So there's like 247,000 in this account right now. Can you imagine if I had $240,000 like cash in my hand showing you? It's such a different feeling. And I mean, even like losing money, oh, we're down 20 G's. Like, if you had that $20,000 in your hand and you had to hand it to somebody, like, ugh. I have a bigger time. We just bought a new place, and I don't know why. It's like we'll be up 5 grand, 10 grand on a day, but yet I have to buy appliances and actually charge $4,000, and that for some reason that sucks. That me spending 4 grand actual cash out of my account sucks more than when I lost 20,000 in a day. I don't know why. NIO's battery swap technique. It could be helpful for Uber folks who cannot afford to charge cars on superchargers for an hour. You don't charge them for an hour. You stop by for like, it's literally 10 minutes, 15 minutes. It's fast. They charge it hundreds of miles per hour, and you don't, when you have one, when it starts charging, the first, like, let's say it's down to 5%, from 5 to 50 or 60% is super fast. It's that last 20-30% that goes very slow. So you intentionally want to run your battery down so it charges up quickly, especially when you're traveling. But looking even past that, I mean, we're going to have the robotaxi thing. I mean, it's just kind of inevitable. So True, when are you switching to Thinkorswim? As soon as they open my account, it sucks. So I have all the paperwork. I sent it like now 2 weeks ago, and every time I call TD Ameritrade to follow up, I haven't gotten an email from them. But they have all the paperwork. They have the check, and I go to call them, and it's like an hour and a half wait. I called them yesterday, and it was like an hour and 40 minutes, and the day before it was like 50 minutes, and I just didn't have time to sit on the phone and see what's going on. So as soon as that happens, I'm hoping it's going to be this week, and I'll just move everything over there and start with a fresh 10 grand or so in this account. Yeah, it'll be so nice just to like clean all this up and kind of go through the rules. Like, this is what I'm going to do. I'm just going to do ABC and then do anything else crazy. I'll just do it in a complete another account. Like, if I went from 500 to 10K, I might take out 1K, but then the rest got to work. Yeah, but also understand, from 5K to 10K, that's $9,500. And unless you're trading in an account set up as a day trader in an LLC, realize you have short-term capital gains on that. Government's gonna want 3-4 grand of that. Robinhood really feels like a video game when they have the confetti. It does. It is so terrible, man. It's just not like the same as cash. Have I considered TradeStation or Tastyworks? I use Tastyworks as well. I do use that. I have an account there, and I actually absolutely only sell put credit spreads on that, and that is it. I've sold 2 on SPY and Dow Jones, and I think, and every single thing else has just been Tesla credit spread, and that's it. And that one went from the 600 to whatever, 12, I think like $12,000 or something right now. I want to transfer to Thinkorswim, but the application is so complicated. It is. It's complicated, but it's like everything. They have tons of tutorials. They have tons of support. Think about this. Like, when I call TD Ameritrade, they're like, press 3 if you want to make a trade. Like, you can talk to a live person to make a trade. You can't even call Robinhood. You can't call them for, you lost all your money, somebody jacked your account, nobody to call. The best case scenario is you have an email, and then they get back to you in a couple days with half the time a form response or something that doesn't actually answer your question. I've never looked at TradeStation though. I don't know what that is. Meet with you. Yeah, don't wait to meet with your accountant. I wish I would not have met with my accountant. And you don't even have to meet with them. Just ask him to get on the phone. I don't know how many times a day, a week you're planning on trading. Just talk to him. Just say, hey, I'm starting with $500. Hey, what happens if I make $20,000? Is there anything I need to do today? I can do today to set myself up so I'm not paying all this out in taxes. I made the mistake. CPAs, they'll talk to you for free. You don't have to. They're not like a lawyer that you have to pay by the minute to talk to. Is it hard to get an LLC account from TD? It's not hard. It's like time consuming if you hate paperwork. Like I hate paperwork. So kind of the steps are: open up your LLC. I don't know what state you're in or what their process is, but usually it's about a $200 online application, and it takes 5 minutes. That's a super easy part. Don't pay somebody to set it up. They'll charge you $500 for literally doing the 5-10 minutes worth of work of filling out a form. So you do that. You go to the IRS. You get your tax identification number. That takes like a minute, and that's free. And then once you have those two numbers, then you have to download all the forms from TD Ameritrade, and I think there's only one that you really have to fill out, but it's actually I have it. I'll show you it. I think it's in here. See if I have the forms. Welcome letter. Okay. Here it is. So here's all the forms. So you're just basically, I mean, it's like how are you going to fund it, and then your tax identification number, just all the entity stuff. And usually most of this is just filling out your name over and over again because you're probably just a single owner, and who's authorized to mess with the account. And it's just you again because you're the control person, account beneficiary, and how you would like your trading confirmations, and let's see what else, and then just like your objectives. And usually you always want to put like aggressive, speculative, just to everything, like you're fine with tons of risk tolerance, how much money you're going to be sticking in there. They automatically give you margin unless you say you don't want a margin. And then signatures. And for 2021, the most difficult part is that you, like for me, you actually have to fill that out, and you actually have to sign it with a pen, and you have to mail it off. And I mailed mine off with a check to be able to open it. They give you other options for funding the account. Like you can't just do regular transfer. You need to open it up first, and then you need to make sure you have a business account that matches it. So I can't transfer from my personal account. If I want to put cash in there, I have to transfer from a business account that matches that name. And but what I will end up doing is just taking Robinhood and just transferring everything over there once the account is open. But at this point, it's taken 2 weeks since I even mailed that off. You need margins for spreads. You don't have to. I don't think you can cover it with cash if you want. I use margin. You want a chance to think of some, but the application is so complicated. You mean yeah, I mean, It's not complicated, it's just time consuming. That's all. And I hate time consuming. Oh, okay. I don't know. I guess I just had margin, so and it's automatic unless you decline it on TD. As far as the LLC account, I don't know on the personal one. On the personal one, I have margin on there. I don't know if I had to ask for it or not. Oh, okay. I guess that makes sense because there's those weird instances where it can close, the stock price can drop, like that poor kid that thought he owed hundreds of thousands of dollars. Thought about that for taxes, but I forget to. Yeah, let's see. Yeah, and then after you send that in, I mean, we'll see the next steps. And yeah, I'll do a complete video on it. I'd like to actually get my CPA on and maybe get her in a Zoom call, and she can kind of talk through some of the criteria. Either that or I'll get it listed out, because to trade through an LLC is one portion, but you also need to make sure you qualify for day trader status, which means you have to do a certain amount of trades. So they want to see there's not a hard number, but they want to see, I believe she said, at least 1,700 trades a year, and you need to be able to say that you allocate a certain amount of your time to trading, and it doesn't have to be like, oh, I'm sitting here, like I can show I made trades for 4 hours a day. No, research is part of it. Like, you could watch this video, that's part of it too, like research, looking up companies, whatever, that can all go into it. But there were a certain amount of hours per day, so that was part of it. But as soon as I get this port done and then I see what the transfer is like, I feel like that's kind of like start to finish, and we'll be able to talk through it all. And I'd love to get her on, because tax stuff, she's way smarter than way smarter than I am. And I still have a few questions too, like when I transfer. So I transfer Tesla over there. Is the value, when I transfer it, is it going to show up in my LLC based on my cost basis, so like what I paid for it, or is it going to show up over there based on the fair market value at the time of transfer? If it shows up there as fair market value, that means I would be paying the capital gains as soon as I transfer it out of the Robinhood on my taxes, which is what I'd like to avoid. And if that's the case, then I really almost have to hold it in my Robinhood for a period of a year, so I don't have to eat that bigger percent, and I can get a long-term capital gains instead of short-term. Oh, you have a cash. So you trade on two different ones, two different accounts on TD. Oh, and also TD just being. Oh, are you saying the actual application or the actual like this is complicated? This is complicated compared to Robinhood, 100%. Like, how do you even buy a stock, right? Just hit buy. And then if you want to change it from 100 shares, what do you do, right? It is, no, we don't want to buy this right now. But the cool thing with Thinkorswim is you can do anything that you could think of. But I think it's worth it, like anything. Put your time into it, watch some tutorials until you get comfortable with the tools that you need to, and then it becomes worth it. Oh, nice. Do you scalp, like, is there like particular stocks that you try to scalp? Like one that you hone into that you know really well, or just something for practice, or? This is so cool, because that's like a whole nother, and then scalping's like a whole nother thing. Like if you get into it and you get good, you can literally do that for an hour a day. You just use SPY. Yeah, I've seen quite a few people do that. Okay. Yeah, I've seen it like on a 25 tick chart. I love it for fun. Dude, yeah, that's why I love all the YOLO plays too. They're for fun. But as long as I'm not doing it with a huge amount. Are you pretty successful overall when you're scalping? Do you do any of the double calendar spreads? Nope. I have not opened up a double calendar spread or a single calendar spread ever. I do trade verticals, which is being referred to as a poor man's covered call recently. Very similar, where calendar spread is, of course, at the exact same strike price, long dated put or long dated call, and then shorting, selling a short dated call against it. I'm just at a higher strike price when I'm selling it. Yeah, I watched. Actually, I watched Logan's video on that. That was pretty interesting. It's just such a weird. It's just such a weird profit zone, and I think I would have to, if I wanted to trade those, which I don't particularly right now. I'm happier with verticals. I would just have to take my time because I think opening it is the really simple thing, right? You could find out what your rules are and apply those and grab your stock and okay, I'm going to look for a certain amount of volatility. I'm going to open it up at this point, these dates. But if things go against your favor, then how to manage that, I think for me would be difficult at this point. It was something I'd have to learn. Yeah, I mean, I love what I'm doing. I'm super comfortable with them. My main things are I probably will only have five, right? I own stock. Um, Obviously, I sell some put credit spreads, and I'll play verticals. Those are like, and I'll play the wheel too. I'll play the wheel strategy. Those are probably the only four that I do like kind of as a core strategy. I opened up that Iron Condor because somebody asked me to. I don't play a lot of those. It's perfectly good strategy, and people make a living off of them. I'm sure people make a living off of calendar spreads, but those just aren't for me. Like you can't be an expert in everything. It's like it's like when you see somebody say like this that's the best thing. And Logan and I were talking about like this is the next 5x stock, right? And they've done literally like 10 minutes of research, and their research is based on whatever they saw in the Twitter feed that day or somebody else's video, and they've never purchased $1 worth of stuff from that company. It's something that they're not familiar with, or they haven't even been on their website. That was a Jim Cramer tweet like, hey, all you guys who bought, and I can't remember what it was, one of these latest like kind of pump and dumps. They're like, it's like, how many of you guys have actually even been on their website? Try the will on Mara or Riot. Yeah, what do I have? I don't think I have. I don't know if I have any wheels in play. Well, I guess I do because I have the top side of them. Actually, I own. Well, this ended up being one I wanted to hold for a little bit, but I believe I have. Whatchamacallit? It's not fun. What's the dang? Play? Yeah, Dave and Buster's. I have Dave and Buster's because of the wheel. That's why. Does it show where's my cost basis? That's why my cost basis. Like I had sold a $13 put on it, but now it's only up 3x. And yeah, and then I sold a $40 call on it. So I think that one, Hawaiian Airlines, I may have gotten that one from playing the wheel MGM. But most of the stocks that I have, I've sold calls on most of them. So I guess except for Coke, just because it's not volatile enough to collect enough premium to make it even worth it to me, and I'd rather just hold them. And I think the rest of them I probably have calls sold on them. So there's the wheel. At what amount and when did you start trading spreads? This account I started with $575. And it was opened November 2019, and then I just really started trading it right before COVID was very prevalent. And the reason I started trading it was because I knew, or my theory was, things were going to go the way they did. I don't know if I realized it was to this magnitude, but I was like, hey, I think the economy is going to take a hit because of this virus. How do I make money with the stock market going down? So that's actually what got me into options. And I took very risky plays at that point, which paid off quite a bit. And then a few months later, I really settled into put credit spreads. And that's what I'm happiest with. I still take a small amount of money, and I'll do YOLO stuff. I will buy dailies. I'll buy Jerome Powell puts. While I'm watching the news, I'll play the news, but the majority of all my portfolio is either equity, playing the wheel, or put credit spreads. I go to the Tesla website for manifestation. Nice, dude. When you start the week with a put call vertical spread, and then you add another put, converting into an iron condor. Oh boy, okay. Start the week with a put call vertical spread, and then you add on another iron condor. How do you manage it? I mean, it depends how the underlying's moving. And that's super short dated for me. And not one of my core strategies. So I did convert. I converted one. Actually, I do have. Oh, I just sold calls and puts on. I'd sold calls and puts on, where is it? Did I close them out? No, AT&T. So I'd sold this 27 put, and I sold a 32 call on my shares. And then I bought the other side to basically make it an iron condor, just because I wanted the collateral back. But as far as managing it, you would just move the wings out if you needed to. Have I ever had to close an iron condor early? Had to? I guess I didn't have to. I chose to. Have a great Sunday. I'm off. All right. See you maybe next week, Taylor. Have a great weekend. I'm late. What are your options? What are your upcoming puts? Tuesday. I don't know. I'm about to find out on Sunday. See what Buffett actually bought. What his secret stock is. I'm waiting for the reveal. I mean, that's going to be pretty interesting. Other than that, like since I want to look for the Tesla trough for sure. I don't. I mean, we'll see what the week holds. But we also have 3 days worth of data that we collected, so that'll be nice. What are your thoughts for Tuesday? Boy, we've been going an hour and a half. Holy smokes. Let's see if there's any other questions that we needed to address, because I probably should get going with my day. I have a whole house I need to deal with that we just bought. I will do, let's see, I will do a video on poor man's covered call. There's plenty of them. There's plenty of them out there, but I'll give you my take on it. My take on Bitcoin. Went on that. So my take on Bitcoin is that it is here to stay. It is good preservation of capital. I think it'll continue to climb pretty heavily now that a lot of big institutions have bought into it. And I don't think the government at this point is going to regulate it to where it would fall any, because so much money is in, so much Bitcoin has been purchased by these big guys, and these big guys have lobbyists, and that money controls policy at the end of the day. What's it called? Do I trade? Yeah, I'll trade earnings, but very small amount of my, very small amount of my portfolio will I do that with. And it depends on what it is. I'm a lot more defensive than offensive, but as far as actually buying things, like just buying things for earnings, they're like far out of the money plays. And so if we get a big move, I'll get some money there, but it's probably 1 out of 5 that I actually hit. And that's mostly, I feel like that's mostly for my entertainment purposes. It's not the main way I'm trying to grow my account at all. Where's Gabriel? Hey, you're welcome, buddy. I feel like everybody says Bud must be from Canada. I used to play. Well, actually, I still play. I only play one video game, but I ended up playing with a bunch of guys from Canada. It seemed like the better buddy. I always heard from all of them. Ireland. So you got that Dublin cheese, dude. So I had a my ex's mom was like straight first generation from Ireland. She found out I liked Dublin cheese, which nobody else in her family did. So she bought me this big ass brick of Dublin cheese. It was huge, and she was so proud of herself and so proud of me that I liked it. But nobody else ate the stuff because it's like so ridiculously strong. It probably mostly went to waste. So you basically only sell covered calls. So I don't only sell covered calls. I sell a lot of put credit spreads. What positions do I have open on this account? I mean, you can kind of look through here. So I have an Iron Condor on Apple. I sold, yeah, I covered. I have plenty of poor man's covered calls open. So, and here's on IDX, that's cash covered put. Jumia was originally just a cash covered put that I bought back and changed it into a put credit spread. Call, $40 call on Open Door, and then I mean the majority, but like you look at the majority of my money, so we have like 30 of these Tesla put credit spreads. We have 12 of these $1,000 collateral put credit spreads on Tesla here. We have, I think there's 29 put credit spreads on Tesla, 25 put credit spreads on Tesla, 61 put credit spreads on Tesla. So I could say the majority of my positions, except for equity, is put credit spreads on Tesla. And then I do have, like, we have quite a bit of equity also. I have 178 shares of Tesla in this account, and then a couple hundred shares of Coke and AT&T and Gap. Some of these I've been holding for a while, and I bought during the big dip. So most of those are up actually, we can see the percentage, right? No, I didn't actually want to see the stock. Let's see. Oh, can't show it in here. So, anyways, those are some of my positions. I mean, I guess you can see the total gain. Tesla's not accurate because I did get exercised on one, but as a percentage, we really can't see it, unfortunately. I think on the mobile app, it's available. You can just show the percentage. I have 7K in my account. Where should you start? You should start with education and seeing what you think, what kind of like fits your risk tolerance and what you want to do. I mean, me personally, and what I've done is a bunch of put credit spreads on Tesla. I love them. 6 weeks out, $150 out of the money. That's what I would do. That's what I will do, starting out. But I mean, don't just listen to me. Listen to other people. See what like fits your trading style. The nice thing about that, I mean, you sell put credit spread on Tesla, $150 out, and you can get a pretty good return on your collateral. So you could open up 20 of them, 10 of them if you just want to play with half of it. Oh no, I'm sorry, 7K. All right, so you could open up 7 of them with half the account. You can go $150 out of the money, and that's pretty reasonable return. You can see whether or not you like it or profitable. If stock goes up, stock goes sideways, or stock goes down a little bit. Nothing wrong with either one. But that's what I would like. And then take some of that money, pay yourself, put it into equity. I need to put this like on my on every video, like what I started with. I get asked that a lot. Or if you don't want to worry about it, just buy ARK Invest and let them trade for you. Dun, dun, dun. Have you invested already? Like, have you started playing with some of these strategies? Oh, so out of the money. Oh, do you want to see like a very specific example? Here. Let's see. Here's what I would do. Let's look at our options. So I still like those March. I guess it's just a week past it. So last week we looked at doing like a 750, 745. I still like these. You see, I like these a lot because we have some money. What are they worth right now? So yeah, you can get $168 per credit times 7. You can collect $1,000 there. If this is your first time doing it, like that's right, you start needing like $1,000 down here, but then you're 100 and some change you can get for these guys. $150. 15% return. A 680, 670. Do it. 7 of those. 7 of those, collect $1,000 premium. $1,000 cash. That's over 10% of your account, opening 7 of them. And we're what, $120, $130 out of the money right now. Oh, nice. So you kind of have an idea of what you like to do if you've already made 3K with it. So I like out of the money put call spreads on Tesla. 680, 670. I would do that trade. I would still do the 745s, 750s. But 680, 670, that's so far out of the money. I think that's a pretty good place to start. I would do those. I mean, obviously I did one, and I have 25 of the 700, 690s. Pretty good amount of premium. But anyway, guys, if there's any last things that we need to go over, you guys have any questions, let me know. I think, yeah, I need to get going. I need to get going and do some other stuff today. So, lastly, I just appreciate, oh, wow, what is collateral? That is super important. So that's the money that you put up in case you lose. So the collateral on the 680, 670 is the price difference times 100. So 680 minus 670 is $10. Times 100 is 1,000. So you put up $1,000 for this, and you collect $157. I stream every Saturday right around 1 p.m., 1:30, the same time, Pacific Standard Time. I am moving, so I just bought a place, and I'm like kind of juggling that with this. So, but that's pretty exciting. I actually get to actually have a place where we get to set up, you know, just for like streaming and stuff. Or here I'm kind of sharing a room with other stuff. So, all right, guys. Collateral makes sense though. Mozzie Flakes. You had to have understood collateral though if you're already selling put credit spreads. But I get it. I jumped into some stuff. I'm just like, hey, screw it. If I lose money, I lose money. But I'm going to learn along the way. Hey, thanks, Nick. All right. Thanks, everybody. Thanks for being there, for being here. Thank you for your time, your questions. Love you guys. Have a great rest of your weekend.